Good afternoon, everybody, and welcome to Zeifmans Presents SR&ED 101. A few housekeeping issues before we begin. First off, feel free to ask questions throughout the presentation located on the lower left-hand corner of your screen, as well as we will be recording today's presentation and you will be receiving a copy of it shortly after, most likely tomorrow morning. I'm Kelly Bird, I'm the Marketing Manager at Zeifmans. And before we begin today's speakers, I would like to tell you a little bit about who we are. So Zeifmans is a full-service tax accounting and consulting firm based in Toronto, Canada. We have 18 partners, 150 local staff members, and 9,000 plus clients. Our services include business advisory, valuation, corporate finance, transaction services, corporate turnaround, and insolvency, and estate and succession planning. We are also a member of NEXIA International. What that means for you is we are globally connected around the world. This alliance that we have provides you with connections to over 700 offices in 120 plus countries and access to 3,400 plus global partners. So with that, I would like to introduce you to today's presenters, starting with Ahmad, a partner here at Zeifmans. Ahmad is the head of our technology and startups team. He has over 20 years experience in developing and delivering innovative and forward-thinking solutions relating to setting up tax-efficient corporate structures, evaluating acquisitions and dividends, cross-border investments, non-resident and international tax, and estate and succession planning for clients in a variety of different industries. Our second speaker for today is Michael McGee, manager at Zeifmans. Michael joined the firm in 2013, became manager in 2017. The clients he works with operate in a variety of different industries, from high tax to manufacturing. Michael specializes in accounting and tax and advisory to owner-operated businesses through providing personalized services to entrepreneurs at each stage of their business cycle. And our finalist presenter for today is Ben Rutman, manager at Zeifmans. He is also a member of our technology and startups team. He has over 16 years of experience in the accounting industries. Ben's expertise lies in managing a variety of clientele, which includes owner-managed businesses, providing privately held and small, medium-sized businesses for nonprofit and charities. And with that, I would like to turn it over to Ahmad. Ahmad, take it away.
Thanks, Kelly, for the kind introduction. Welcome, everyone, to our SR&ED presentation, and thanks for joining us today. I would like to start with setting the agenda. Today, I'll talk about the SR&ED program in general, and then Michael will discuss the calculations in a bit more detail, and then Ben will take us through the compliance part of the program. And at the end of the program, we'll be happy to answer any questions you might have. So let's get right into it. The Scientific Research and Experimental Development Program is a federal government incentive to design and which is designed to encourage R&D in Canada. There are provincial programs which mimic the eligibility for SR&ED, which augments the total incentive. We'll talk about that in a second. SR&ED incentive not only helps the applicants in terms of helping with their startup costs or R&D costs, subsidizing those costs. It also incentivizes businesses to create the technology and IP in Canada, which in the end benefits the Canadian economy as a whole. Every year, approximately 20,000 businesses benefit from the SR&ED program. An approximate allocation by the government is around $3 billion from the federal government. And then, as I said, various provincial governments have their own supplementary R&D programs which complement the federal program. Most of the applicants, it's interesting to note here, most of the applicants are actually small business. It's estimated two-thirds of the applicants under the SR&ED program are what we call Canadian-controlled private corporations. So this concept journey I hear most often from people who have not gone through the program or they are looking at it for the first time, that do I need to have a dedicated R&D lab? Does it need to be a very, very structured process? So that's not true. As long as you are undertaking any eligible activities, you should be able to participate in the program. So let's look at the way a SRED application can benefit your business. As I said, the program is essentially twofold. Any R&D expenses you have in Canada, you are able to deduct that against your income in Canada. And if you do not have significant revenue, as you mentioned, you may be in a startup phase and you are still building up the business, you can pool those expenditures for future years and carry those forward for up to 20 years and deduct those expenditures against future earnings. And then the second part of the program is that you get a refundable credit, and that's the key. Most of the credits from the government are generally non-refundable in nature, but some of the SRED credits, particularly applicable to the small businesses, Canadian-controlled private corporations, are refundable credits. That means you get the refund even if you don't have any taxes payable. So if you apply for the SRED program and your application is approved and you have some taxes payable, of course, government is going to first apply the grant against the tax bill. But in addition, even if you don't have any taxes payable, you get that significant portion of that grant as a refund. The refund from the federal program starts at around 15% and goes as high as 35%. And as I said, various provinces augment that. In Ontario, there is an additional refund available. There are two Ontario programs which supplement the SRED in activities in Ontario, and both of them add to 11.5% combined refund on top of the 35% refund from the federal government. So let's talk about what kind of activities qualify for SRED. So essentially, it covers three basic elements of R&D. Either you're doing basic research, which is work undertaken to advance scientific knowledge without any specific application. It's mostly what's done in an educational setting. And then also, if you're doing some applied research, you have some scientific know-how and you want to apply it to a particular solution and a specific application, then you are doing an applied research and the program applies there as well. And the last category is what we call experimental development. This category is the most broad in nature. It covers any work undertaken for the purposes of achieving technological advancement, creating any new product, improving any product, improving existing materials, services, devices, processes. And when we say a new product or improving an existing product, it doesn't need to be a significant improvement. Any incremental improvement to the existing products and processes count. And in terms of what businesses are eligible, as I said, most generous aspect of the program is applicable to the smaller businesses, what we call Canadian-controlled private corporation. Essentially, any corporation which is resident in Canada and it's controlled by Canadian shareholders is considered Canadian-controlled private corporation as long as its ultimate control does not lie with a public entity. So if some private individuals, resident of Canada, start a business, that would qualify as Canadian-controlled private corporation. That's where the program is, at the most generous 35% federal refund, along with the provincial applicable provincial refund rate. And then, even if you are not a Canadian-controlled private corporation, for example, you are a public corporation, or in certain cases, if you are a foreign corporation, but you decide to do R&D in Canada through a subsidiary in Canada, you may be eligible for SRED incentive as well. In that case, the refund rates come down to the 15% as opposed to 35%, but you are still eligible for the program. And lastly, you don't even have to have a separate legal structure to be eligible for the program. If you're doing R&D work and you are just an individual and you're doing some R&D, which may be eligible, you can definitely apply for the program as well. We have seen, partnerships and trusts submitting their applications under the program as well. So there is no real requirement that you have to have a separate legal structure set up. It's just that if the structure is the right structure, you can benefit from the program a little bit better. Now, with that, I will now hand over to Michael McGee, who will walk us through some of the basic calculations for the SHRED program. Michael?
Thanks, Ahmed. So yeah, the fun stuff now. We're going to calculate some SHRED and get into the details of how it all shakes out. So first step, one thing that we talk about if you went down the path of claiming a SHRED credit is you got to pick a method to calculate the SHRED expenses. Now, one of the things involved is overheads. So when you're calculating overheads, this might be your building or some specific travel expenses. It's overhead and other expenditures, they call it. It could be property taxes, etc. So one of the two ways is the traditional method. So another word would be just the actual expenses. So you would claim the specific expenses related to your overheads. So that would be the actual building cost. This is easier if you have a separate business for your R&D, and you can track the property taxes and the overheads a little easier. But you can do it even if you do commingle, and we'll get into a bit of more calculations that if you have your administration and your research in the same building. Another way is called the proxy method. This uses a specified rate just to apply to your salaries and wages. So if you take the salaries and wages base of, let's say, $1 million, the proxy method, you get 55% on top of that. So you just automatically blanket. You don't claim any of your actual rent expenses. You just get this 55%. There's a little bit of nuances with, there's caps and stuff like that. You wouldn't have to worry about that. We would help you with the calculation of the caps and stuff like that. But traditionally, the proxy method is a little easier, and clients prefer it. So when you're deciding, or when we are deciding between the two for your overheads, there's some advantages and disadvantages of each. So the traditional method, one of the advantages is the overhead expenses that you do claim. They're deductible, and it's deductible from your taxes payable or your net income for tax purposes. It's not super technical in that it's you still get it on the salary base under the proxy method, but the traditional, it's an enhanced deduction for your federal taxes. You also, if your overheads are actually higher than the proxy method, so in my last example, I gave you $1 million, multiply it by 55%, your total SHRED expenditures would be $1.55 million. But if your rent on your R&D space was actually higher than that, it was, let's say, $800,000 with property taxes, et cetera, the traditional method might actually get you a higher claim. The disadvantages of the traditional method, though, is that you have to be able to demonstrate how the overhead is directly related to the SHRED, and it can be complex in certain situations. So you have to be able to specifically track and allocate the SHRED expenses of the overhead. And so, and I'll get into a little more details of that later. The proxy method, though, you don't have to specifically identify the overhead expenses. You just use the 55%. So it's easy to determine after you figure out what your salary base is. But the disadvantage, one of the main disadvantages is that if your traditional method would have given you a higher amount, let's say the $800,000, and you took the proxy method because it was just simpler, you could have left some money on the table because you only got $550,000 instead of $800,000 in that example. You can reduce those numbers down, on a salary of $500,000. Same math works on the proxy. And there's other little intricacies that you have to calculate the overall cap. But again, you wouldn't have to worry about that. We would help you with calculating any of the cap restrictions. So with the allowable SHRED expenditures, the main one that you'll always talk about is salaries and wages. So you take the base of your salaries and you normally calculate the proxy on top of that. So salaries and wages, though, they break them into kind of 4 categories, but let's say 2 main ones. specified employees and non-specified employees. So a specified employee is either a shareholder that owns more than 10% of the company, or it can be a specified employee who is related to a specified shareholder. So if you have a child that works in your business, they could be a specified employee. There's different rules about how you can claim them. A non-specified employee is just everyone else. But basically, a specified employee, you're limited. You can't claim any bonuses or remuneration that's based on profits. So it's just your salary you can claim. And that salary is limited to 5 times the specific year's pensionable earnings. So if you had a specified employee and you do R&D yourself, in 2020, the pensionable earnings was $58,700. Multiply that by 5 is $293,000. So you can only claim yourself, if you're the business owner, up to that limit. If you pay yourself $1 million, you can't claim SR&ED on that. And non-specified employees, the sky's the limit. And then if there's work performed outside of Canada, so the rule is that for the amount that's done in Canada, you can get up to 10%, you can claim up to 10% outside of Canada. So if you, again, had $1 million of payroll in Canada for R&D, but you had 1 employee in the US that you paid $200,000, you can only claim up to $100,000 of that US employee's claim. And the same for specified, you just blend the two. It's limited to 5 times again, up to 10%. Another allowable expenditure is cost of materials consumed. So any stuff that you use for prototypes or disposable items that you use during your testing. So in manufacturing, if you're building a new product, it could be all the cost of materials that you use to test out the new product. Cost of materials transformed kind of piggybacks on that. If you blend 2 of your items together and it comes into this transformed product, a prototype again type style, you can claim that. SR&ED contractors, so let's just say subcontractors. The subcontractors you can claim. So if you farm out the work to somebody else to do it for you, you can claim them, but you don't get that proxy amount on top of it though. So that's just, the theory is that you don't have to put a roof over their head. So if you are hiring someone else to do some research, you subcontract it out, you just don't get that extra 55% bump or the overhead cost. But you still get, I think, or it's 80% you get the claim. So if you paid a subcontractor $100,000, you get to claim 80% of it for your SR&ED pool. Arm's length contracts, that's the same idea. Non-arm's length contracts though, so if you have a second company that's related to you and they're doing some of your R&D, you get the SR&ED deduction deduction, but you don't get the ITC. There is a form though that you can file. So if you have that arrangement where you're paying a related company, we can file a form to get all those expenses transferred over to the company that's claiming the SR&ED. So there is ways around that one. Overhead, so I talked about this at the beginning. So if you pick the proxy method, you just ignore this section, you just go straight to that 55%. But if you try the traditional method, then the expenses that you can do are, you have to either, for these ones, there's specific items that are directly attributed to the SR&ED. That would be your travel, utilities, telephone charges are some examples I've listed. So those ones you can't say 50% of the travel was related to SR&ED. No, you have to go and find the Air Canada ticket that you sent an employee out to do training or something like that. So, or utilities, telephone, like that employee's telephone got siphoned off. So you can't just use a reasonable percentage there. You have to. So this is where the traditional method can get complicated fast. Expenses for the provision of premises, so that's like your building. So you can claim the building, and you can use a reasonable percentage in these ones. So like I said earlier, if you use 50% of the building for your research and development, you can apply a 50%. You'd have to support that. If CRA comes in, they will check the square feet. So, and again, with that, you would apply the same percentage to your property taxes, costs for cleaning, etc. Third-party payments, this is, it's kind of like subcontracting without, it's kind of more open-ended. So an example would be if you are a pharmaceutical company and you gave money to a hospital for research on a drug that you would have the rights to use. So you haven't given money for a specific subcontracting thing, but you can benefit. There is implied research and development that you will be able to exploit. Then you can claim those ones. Another example could be a physician that gave money to a university for basic medical research in their field. So you would actually be able to get some SR&ED credits for that. And again, you have to be able to demonstrate that it's in the same field and your business will be able to benefit from it. An example that you would not be able to claim is, let's say you're just a business that manufactures a product and you gave money to a hospital. That won't be SR&ED because it has no relation to your business. So Ahmed briefly touched on all of this with how much refund can you expect. This is the part that we're all here for. How much money am I going to see, or how much tax am I going to save? So the CCPC gets the enhanced rate up to 35%, up to $3 million, and then after that it's 15%. If you're another corporation, it's 15%, and if you're an individual or a trust, it's 15%. And since or at least I'm in Ontario, there's two other programs that you automatically enroll for. Again, it's just an enhanced amount on top of this 35%. There's the Ontario Innovation Tax Credit, 8%, and the Ontario Research Development Tax Credit, it's up to 3.5%. Again, you don't have to really know too much about it other than that you automatically qualify if you're going for the SR&ED, and it basically bumps up the benefit even more. So I have two examples here of doing some math on it. So I have a scenario where I made a company that has the same revenue as it does expenses. So it's got $1 million of revenue and $1 million of salaries and wages. I left out subcontractors because it starts getting complicated fast, but after it all shakes out, you have the million. We're looking on the left side here. If you have $1 million of salaries and wages, you add the 55%, you're left with $1.55 million. You add the 2 Ontario credits, and then the eligible expenditures, it starts subtracting, it gets complicated, but the federal income tax credit is $481,000. If you add up the refundable federal portion and the Ontario portion of $124,000, on $1 million of salaries and wages, you'll get back $605,000, or the benefit of the SR&ED is $605,000. If you have Part 1 taxes, then it'll come down a bit. It'll pay your tax first, and then the net amount you'll get a check. So, but it's a pretty generous check for SR&ED. The second example, I wanted to show one where it goes over that $3 million cap. So you have now salaries and wages, as I just said, $3 million plus the proxy amount of 55%. So now your total SR&ED pool is $4.6 million. The Ontario credit, it's capped fully at 8%. So it just hits $240,000. And the Ontario Research Development Tax Credit, it's the 3.5%. There's no cap on that. Then after you do the calculations, the federal portion is $1.13 million, and you'll get a refund of $1.35 million. And this, you've got to look at this in a vacuum because there's other things that can move this around if you have other taxes. But on $3 million of salaries and wages in this scenario, you'd get a refund and a check in the mail for $1.35 million. I also assume there was a bit of Part 1 tax because of the way that there's a timing difference on the SR&ED in this scenario. So there was $30,000 of tax I had to put in because I didn't want to leave that out. And then there will be carry forward ITC, and you have to carry it forward because your taxes payable weren't high enough. So you can see here, the point of this was to show how generous this credit really is. And the 35% that we talked about on the expenses, you got to include the proxy amount or the overhead costs that you can add on to it. So on the salaries and wages, it's 35% of that higher number. So with that, I'm going to pass it off to Ben, who's going to talk about what you have to do to apply.
Thanks, Mike. The next step to discuss is, what do I need to do to apply for this SR&ED program? As you are all aware, the Canadian government requires that both corporations and individuals file annual income tax returns. The Canada Revenue Agency requires that 2 forms be filed with your income tax return to apply for the SR&ED program. One of the forms used is the T661. This form is required to be filed by both the individual and corporations. The form is used to provide technical information on your SR&ED applicable projects, in addition to calculating your SR&ED expenditures and investment tax credits. When filing the form, you need to determine which SR&ED method you will be using. As Mike mentioned previously, there are 2 methods to choose from when calculating your SR&ED claim, which determines the SR&ED expenditures for the period. There's the proxy method or the traditional method. You're also required to provide some additional information, such as the project start date, the project completion date, or the expected completion date, project description, such as what scientific or technological uncertainties did the company or individual attempt to overcome, what work was performed during the year to overcome these uncertainties, and what scientific or technological advancement was achieved or attempted to be achieved. These forms also ask the individual or corporations to disclose what evidence they have to support their claim, such as project planning documents, record of resources, design experiments, project records, progress reports, contracts, in addition to various others which can be seen by looking at the form. You're required to retain these items in the event that the government decides to review your claim. Another form required to be filed is either the Schedule 31 or the T2038. The Schedule 31 form is required to be filed by corporations, while the T2038 is required to be filed by individuals. We'll discuss briefly about what Schedule 3 and T2038 forms are used for. The Schedule 31 form is used to calculate the investment tax credits earned during the year, to claim a deduction against any Part 1 tax payable, to claim a refund or credit earned during the current year, or to claim the Ontario Research and Development Tax Credit if you're in Ontario. The form also requires corporations to determine if they are qualifying or non-qualifying corporations for the purpose of calculating refundable investment tax credits claimed by the Canadian-controlled private corporations on eligible investments and or SR&ED expenditures during the period. In addition, on this form, the SR&ED claimant must determine if there is any investment tax credits to recapture for the period. The T2038 form is used by individuals to claim any investment tax credits used to lower the individual's federal taxes payable. Any individual filing the SR&ED claim would file the T661 form and the T2038 form with the individual tax return, while the corporations would file the T661 form with the Schedule 31 and their corporate tax return. It's important to make sure that all the forms are filled out correctly with as much detail as possible, especially relating to the technical aspects of the claim. The accuracy and details of information submitted to the CRA can have a significant impact on the outcome of your claim. In addition, as discussed above, you have to ensure you keep a detailed records in case the government decides to review your claim. Another item to discuss is the deadlines to submit and the processing timelines. While a corporation's tax returns are due 6 months after the year end, the government provides an additional 12 months for the SR&ED claim to be filed. So both the T61 and the Schedule 31 forms must be filed within 18 months to the end of the tax year which the expenses were incurred. As mentioned earlier, the forms must be submitted with the annual tax returns for both the individuals and corporations. The Canada Revenue Agency timeline is that all claims which have been accepted as filed will be processed within 60 calendar days of the date the completed claim was received. And refundable claims selected for review or audit will be completed within 180 calendar days or the date the completed claim was received. The next step, as I'm sure all of you want to know, is what happens after the claim is filed. Once the claim is submitted to the Canada Revenue Agency, the claim will go through a screening process to determine if the corporation or the individual is eligible for the claim and whether the forms have been completed correctly. If the claims have been accepted as filed, the claim will be processed within 60 calendar days of the date the completed claim was received. Sometimes the CRA will decide that more information is needed to complete the screening process. In that case, your claim will be sent to a tax services office, where professional, technical, and financial reviewers will evaluate the claim. If the claim is selected for a detailed review, the CRA reviewer may visit the business, speak with technical and financial staff involved in the claim, and review documents and other supporting evidence to support the claim, which, as I said before, is why it's important to keep your support. In addition to SR&ED programs, there are other available Canadian tax and loan programs. One such program, as you may have heard by now, is the Canadian Emergency Benefit Account, otherwise known as CEBA. CEBA provides interest-free loans of up to $60,000, 20 of which is forgivable, for small businesses and nonprofit organizations. The funds have been made available for applicants specifically impacted by COVID-19. Information regarding this loan can be found on the Government Canada website, such as requirements for receiving the loan and the date the loan needs to be repaid in order to have the $10,000 to $20,000 of debt forgiven. The loan can be applied for through Canadian Bank online. Another option is the Business Development Bank, otherwise known as BDC. It's a financially sustainable crown corporation, whose sole shareholder is the Government of Canada. BDC helps develop strong Canadian businesses through finance, advisory services, and capital with a focus on small and medium-sized businesses. They offer a number of financing options. One such option is startup financing. They offer up to $250,000 to jumpstart projects, up to 12 months of principal payment postponement at the start of the loan. Another option is technology financing, with up to 100% of financing to cover costs of projects, up to 4 years to repay your loan, and up to 6 months of principal payment postponement at the start of the loan. A third option is a small business loan, which they offer up to $100,000, and you can apply for online through their website. A third option is the Industrial Research Assistance Program. The National Research Council of Canada Industrial Research Assistance Program is Canada's leading innovation assistance program for small and medium-sized businesses. It provides advice, connections, and funding to help Canadian small and medium-sized businesses increase their innovation capacity and take their ideas to the market. More information about this can be found on the Government of Canada's website. A fourth option is FEDEV provincial financing. FEDEV Ontario works to create opportunities for economic growth in Southern Ontario by helping businesses become more competitive, innovative, and productive. They do these through a variety of programs and services. The Strategic Innovation Fund covers all sectors of the economy and is available for profit and not-for-profit organizations, with the goal of supporting the Canadian innovation ecosystem. More information for this is available on the FEDEV website. We have reached the end of our presentation. We wanted to thank you all for joining us today. I'll be welcoming back Ahmad and Mike, and we will now be taking some of your questions. You should see a chat box on the bottom left side of the screen, and you can type your questions in there.
Perfect. Thank you, Ben. As Ben has stated, we are moving into our Q&A portion of today's webinar. My first question that has come through is for Ahmad. Ahmad, what is a typical business profile sector of a SR&ED applicant and typical size of the claim? Ahmad?
Thank you, Kelly. Thank you, Kelly, for the question. Yeah, so, really we see all kinds of businesses applying for the SR&ED program. As I mentioned, I've done a lot of applications for businesses in the software sector, but at the same time, we have some manufacturing clients making some really basic products. But for example, if you're doing some research that the stain you're making would not fade in the sun, and you had put in some R&D around that, and that's eligible. We have some clients in biomedical research, and we file their SR&ED claims. So it's like, there's no restriction in terms of what business background sector you have to be able to make the claim. In terms of the size, we typically see startup businesses making claims around 300,000, 400,000 range, but we have seen that once you are successful and you have an established track record and you are actually doing the eligible activity, we routinely file claims for maximum amount of $3 million for a lot of significant size businesses who are doing a lot of R&D work in-house. So the size, I would say that you want to think about filing an R&D claim if your R&D activity is, you have about 100,000 in R&D expenditures, you are getting a decent $60,000 refund.
Perfect. Thank you, Ahmed. And our next question that we have is for Michael McGee. What are some examples of companies that do manufacturing that you've seen claim SR&ED?
So yeah, kind of like Ahmed said, there's a company that did some, they manufacture some backyard products, and part of their research and development could be that they were trying to get the backyard products wind resistant. And so they're doing modeling on the computer, they're making prototypes, and their product, they're trying to overcome this technological part of making it last longer than the competitions. So all of that research and development for the staff that worked in the modeling department like that is eligible. One that's not manufacturing, but it's just it's not really hard science in the traditional sense. It was a company that they basically have an online platform for a community of engineers, and they created this software that curated articles in a more efficient manner, and it brought more relevant information to readers. So again, that was another example of the time that went into developing that. They claimed for SR&ED. So two different worlds. One is on the computer, and one is physical products. But again, it always involved increasing or improving the technological part of their product.
Perfect. Thank you. Back to Ahmed. What does a CRA audit or review process look like? What kind of questions do they ask you? What steps are involved? Can you expand upon this?
Yeah, so usually there are two different kinds of audits: a technical audit and a financial audit. So a technical audit is where a subject matter expert will evaluate the technical merits of your application. So it would be essentially somebody who has a bit of background in a relevant R&D field. They'll look at your application and they'll see if it meets the criteria. The financial audit is where they look at the claim amount and they try to establish that all of those were actually eligible and verifiable expenses. Now, as Michael mentioned, the claim really starts, the basis for the claim is your salaries and wages involved in R&D. And those are very easy to defend and establish. There's usually a T4 issue to those employees. They will ask for the background of the employees, the relevant education, experience, and time sheets establishing the amount of time they spend in a particular project. So those, but once you have that and you have chosen the proxy method, it's fairly easy to defend the financial side of the claim. It's a technical side where you want to make sure that you are, I see one question in the chat box as well regarding does the routine engineering qualify? So unfortunately not. Routine development engineering would not qualify. Marketing research, for example, would not qualify. But if you're doing, and that's where the the experimental development part of that SRED program is important to keep in mind. But it needs to be something with a little bit of uncertainty involved, something which you don't have a clear pathway, and you're trying to develop something new. So that kind of technical auditor would look at those kind of aspects of your claim.
Perfect, thank you. And this question that I have is for both Mike and Ahmad. So can you provide an example of someone who is an industry or a client who has claimed went to file a SRED claim that maybe falls outside of the normal box or that would qualify for the credit? And Mike, can you start with you?
It falls outside of the box. Well, a lot of people do, they improve their processes. Like, I don't have a specific example in my head, but a lot of people do work that they don't even realize is shreddable. And I'm saying that in the sense of they don't know that they can claim shred on it because they just kind of do it on a regular basis to improve their products. So I would say we gotta talk. Any businesses that think that they might be doing something that's possibly shreddable. Like I gave an example, lots of people are doing things like the people that make the backyard furniture. They're just trying to create a new product or improve a product, but they didn't realize that there's a shred incentive on top of it. The people that are in the computer science industry, they already, well, once we explain the program to them, they know it's a slam dunk because they're creating new technology. I've got one where the technology they make is so far forward that when they write the SRED program descriptions, it might as well be in a different language. So there's different levels of it, but once we explain the program to them, they're like, I'm definitely in. But it's the people that are in the manufacturing side that are improving their products. They always don't realize that there's possibly something that they're doing that they can get SRED credit for.
So I just want to add,
yeah,
so I will add just a little bit in terms of, I've seen questions from some clients. Look, I know I am getting paid to develop something, and will it still be shreddable? So the fact that you got paid to develop something is not necessarily, an impediment for your claim. As long as you are doing something which advances the technology, which addresses this, problem for which there is no solution, absolutely, you can get paid from your customer, as well as you can file a claim for SRED for that particular R&D you were doing on behalf of your customer, as long as you retain the ownership of the resulting IP. That's the key. And also, for example, if you're doing something which may not be directly customer focused, you're improving processes which are helping you internally to run the business more efficiently. You needed it. For example, you have multiple different databases, and they typically don't talk to each other, and you need some tools to be able to converge all of that data and make them talk to each other, or be able to get the report from each one of those databases and manipulate that. And there's nothing which you can buy off the shelf, and you are creating it for your own consumption. That might be eligible for SRED as well.
Perfect. Thank you, Ahmad. and we have another audience question, and I'll put this forward to all of you, whoever answers first, we can go from there. So, does the standard engineering work for product development or improvement qualify for SR&ED?
So actually, a routine kind of development work, that's what my understanding is when you say standard engineering work would not qualify, because if like for example, let me give you an example. If we are just creating a website, that work would not qualify because you're doing web development, but it's not an R&D work. So routine development would not qualify.
Perfect. Thank you. And this question is for Mike. Would any COVID relief funds, such as RRF and others, impact or possibly reduce any SR&ED claims approved?
So COVID relief funds, the main one that we're all familiar with is the wage subsidy. Yes, the short answer is yes. If you have another government grant that's directly related to that expense, which would be your salaries and wages, that will reduce your SR&ED claim. So if you had salaries and wages of $1 million and you claimed wage subsidy that offset, let's say, $600,000, you can only claim SR&ED for the remaining $400,000. But that doesn't mean that you can't double dip on both programs. So basically what you're saying is you'll have that $1 million, you'll claim the subsidy, and on the remaining $400,000, you're saying, okay, well, I'm going to go after SR&ED for the remainder. So at the end of the day, your cash received is very good. But it's beneficial if you're trying to decide, should I claim wage subsidy and SR&ED? The answer is claim both. But it will reduce your SR&ED claim. So your absolute cash flow dollars is higher by claiming both.
Perfect. Great advice. And let's wrap up our Q&A portion for today. And I'd like to move to closing thoughts from all of our presenters. So let's start with Ben. Ben, what are your words of wisdom or any piece of advice you'd like to give to someone who is applying for SR&ED?
Well, like I mentioned during my presentation, the most important thing I would say is record keeping from day one. The more detailed the records you have, the better chance your claim of being accepted. That would be the main thing. Also, your project descriptions, when you fill out the SR&ED forms, like I said before, any errors in that filling out of the form could result in a delay in getting any funds or getting your claim not being accepted. So pay attention to details, both in filing and filling out the forms and in terms of record keeping. The more detailed, the better the chance of everything being accepted. That would be my words of wisdom to all of you listening.
And Mike, what would be your words of wisdom for everyone today?
If you're in doubt, ask us if it's shreddable. We just talk about it, see if what you're doing. When you bring us your financial statements at the end of the year, we don't talk too much sometimes based on what you have been working on during the year. But if you're carrying out certain activities and you think it might be shreddable, talk to us. We'll go through it together. And if we decide it's no, then you do exactly what you were going to do. If it's yes, then there's a really good benefit sitting on the other side of the claim.
Perfect. And Ahmad, what are your final pieces of advice for everyone today?
So I think just to expand where Mike left off, so the program is really to incentivize businesses to carry on R&D in Canada. So it's not that you are, it's not a tax return where the intention is to maximize the revenue for the CRA. The intention for the government to establish this program is to incentivize R&D in Canada. So you should definitely be thinking about participating in the program if you think it's applicable, and if you are in doubt, please talk to your tax advisor, have that conversation, and see if it qualifies.
Amazing. So my closing thoughts for everyone today, if you have any questions, for anyone on our technology and startups team, please feel free to reach out directly to us. Our contact details are found on the lower half of the slide. So again, our website is zeifmans.ca. You can reach out to us directly at 416-256-4000 and just ask for either Mike, Ben, or Ahmad, and we'll be more than happy to follow up with you. If we didn't answer any of your questions, we will be following up with you directly post-event. So with that, everyone, have a fantastic day. Thank you for joining us, and thank you to our presenters.
Thank you.